it's a mixed set that we are seeing in the Asian screen right now.
The way down, the Nifty Bank support stands at 51,157.
Instructions have gone out to OMCs to keep the intra-state price variation within 2 rupees a litre, be it petrol or diesel.
Cost of cars is also going up because the regulations, especially regulations relating to safety.
Down 0.25% on the Bank Nifty. The Nifty is down about around that much, 0.25% or so.
I think from here, 15 days out is likely to be higher because we have already taken a bit of a knock this month.
We are not lending against the gold against agriculture purposes.
Non-aero tariffs are not determined by ERA, they are determined from free market.
If I take the last 20 years, there have been only 4 down years in gold.
We started on the from the lows, but we have recovered from the lows of the day.
HPC brands, completely cater to. Yes, there is some little bit of a stress.
No, I don't think any change to guidance.
70-point cut that we are seeing on the Nifty currently. It's off the highs of the day.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good afternoon. You're with us here on a fresh new edition of Bazaar of Closing Bell. My God.
We're at the end, last 1 hour.
Tomorrow, right? This is the last hour coming up. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi, good afternoon.
Hi, good afternoon, folks. So I guess we're in the last 1 hour and the market's sort of, trying to get into that festive fervor and spirit, and earnings are coming thick and fast. So it's been quite a hectic day.
Well, that's right. The Nifty Bank, that's pulled back a little bit. It's currently at the low point of the day, down 550 points, holding on to that 51,700 though. And it plays out the weekly expiry. So let's see if it can turn things on its head. But for the time being, that's the index that's led the way higher in the last 2 sessions, and today taking a bit of a breather.
Absolutely. I was thinking yesterday, good morning. Today, Bazaar. I think it's time for a holiday.
I think so. I think for all of us here, because
you think so?
Absolutely, I'm with you on this one.
Oh my God. So anyway, you got the market, which is, I think it's seen 3 different stages so far. Look at the Nifty, right? I mean, 100-point sell-off immediately after we started. And then a full 100-point, actually 130-point recovery from that level. And then a 100-point cut again. So, 3-part kind of markets, if you want to divide it cleanly. And actually, you can divide it pretty cleanly. So we're down about 0.45% or so. For the Nifty Bank, it's an inside day, which means that if you look at the high and low for today, it is basically inside the high and low for yesterday. Yesterday, of course, was a much wider range. Today, it is not, but we're at about 51,800 right now, down about 0.9%. Broader markets, and this is interesting, broader markets are higher. So you look at the micro cap index. We don't look at that very often, but I noticed lots of very small stocks, even some SMEs, 5, 7, 10% higher. And you got, of course, small cap index, which is higher as well, with about a 1% kind of pop. The sectors which are higher, FMCG and autos. Autos are the other pack. You got sales numbers for the month gone by in a day, 2 days. And the day after tomorrow, you'll have the numbers. And will that be material? Because many of these stocks have sold off pretty aggressively. The numbers are better than expectations. I think you get a bit of a move here. Surabhi.
Absolutely. So if you look at sort of the movers and shakers, the constituents today, what's been consistently pulling us down, obviously, are some of the financials. And that picture is a telling one. If you look at it right now, HDFC Bank, Axis Bank, there's a lot of profit taking going on, particularly in names like HDFC Bank. I mean, it was the star of last week, but this week's turned out to be fairly different. And then you have names like Infosys, HCL Tech, so IT as well. So both the twin engines seem to be faltering, which explains the kind of 100-point fall that we've got going on the market. On the flip side, however, some of the Adani Group stocks are obviously, continuing reaction from earnings as well. Adani Enterprises up 4.5%, Tata Consumer, these are up and about. And then that trend of buying beaten down auto names, that's also quite evident this afternoon. Examples would be Maruti Suzuki, Hero, Bajaj Auto, a lot of these stocks being buying ahead of the monthly data.
I'll tell you what's different about this week in comparison to last week is you're at least getting some earning surprises. Last week that was missing. AB Capital just came out with a set of numbers. The stock was trading in the red. It's up close to around 5%. A beautiful intraday chart should come up for you. JHCL, that as well came out with a set of numbers. The stock is now up close to around 15%. So you're getting these pockets of strength, which is good news, right? A couple of these stocks, like, if you look at data patterns, that had pulled back a goodish bit. That's up close to around 13%. So that dip has got bought into. ACE as well had seen a lot of selling pressure from the top. The short point that I'm trying to make is that it seems the mojo is back with the markets. Last week that was absolutely missing. No earning surprises, no big stocks moving around. Now you have stocks moving around and on fairly decent volumes as well. So I think the screen is looking far better for the bullish perspective in comparison to what it was last week. And the Nifty as well has managed to pull back. I think if it goes through a time-wise correction, the bulls will take it. They'll say, let's consolidate it for a little bit and then let's try to bounce back up. But for that, the Nifty Bank will be of prime importance. But let's go back to Mitesh Thakkar, who joins in. Hi, Mitesh. Good afternoon and good to see you as always. Well, that level of around 24,750 is the one that you're looking in on the upside, and then you said you'll review it. Currently, what is the trade? The Nifty is down 100 points. But more interestingly, tell us about the Nifty Bank, because that's down 500 points. The dip is a buying opportunity? Mitesh, we'd like to hear you.
Yeah. Can you hear me now?
Yes, please.
Okay. So, the Nifty Bank has turned weak today, and the Nifty also has drifted down. But after 3 days, which is Monday, Tuesday, and Wednesday, we had very similar highs. Monday's high was 24,490. Yesterday was 24,484. Today was 24,498. So 24,500, the first level which I had, is still, proving a hurdle in the short term. And my sense is that, the next leg of rally should happen only once we get past 24,500. So tactically, the adjustment which we have done is that we booked some long positions. We'll re-enter once we see the Nifty get past 24,500. Or it comes down to support areas of 24,180, 160 zone. That's the rising 29 level. So either you buy at those levels or you buy on a breakout of 24,500. And that's the way we approach it. On the stock specific basis, though, I have, a slight long bias because a lot of stocks which had declined a lot were oversold, have given good reversal. So I think, that's where the movement could happen on the upside. I have a buy on Dalmia Bharat Cements, and in fact, cement as an entire pack is looking very interesting and very strong to me in the short term. So that's where I would explore long position. So Dalmia Bharat is a buy with a stop below 1815. Look for a target of around 1920, 1930 on the upside over here. And while other cement stocks are also good, that apart, I think I would want to take one negative position, and that's on Aurobindo Pharma, where I would recommend selling with a stop at about 1421 for targets of 1365, 1360.
Okay, all right, got it. Mitesh, thanks very much for those calls. We will come back to you for some more ideas in a bit. Let's get the conversation going with Prakash Diwan, who's joining us on the show this afternoon. Prakash, great to have you on. Season's greetings and wish you a very happy Diwali. So for the market, I think the market's trying to make up its mind, right? Whether it is in an optimistic mood or slightly sort of, a downbeat mood, because the index has been going all over the place. But, let's start with a couple of names on the auto side, really, because that's where the biggest debate is. Whether there was too much of pessimism built up looking at the first 2 weeks of the festive data, and whether the full picture, will not be as bad. And I think maybe that's some, buying ahead of the event that we're witnessing today. So what do you think? The OEMs were saying picture abhi baki hai, but do you agree? And what's the call on Maruti specifically?
Yeah, hi, good afternoon, Surbhi. Thank you for the Diwali greetings and wish all of you in CNBC and the audience a lovely festival ahead. My sense is the market is getting into a festive mood. Whether sales really, if that translates into sales or not, I don't know. But the market's definitely wanting some good news to work on. And if you look at the reaction to earnings today, it's been far better than what we've seen all these days. While there have been some good earnings, they've been rewarded, but very temporarily or very transiently. On autos, what's happening is if you ask dealerships about restocking, they have learned from the mistakes of the past, and they're not kind of adding up inventory in anticipation of this whole thing. There's no build-up. Because of that, you probably don't see it getting captured in the numbers. But if that were to happen, and I'm sure some segments will see some buying come through, those numbers will look very nice in the December end quarter. So to make it simple, for investors, it's a good opportunity to buy into OEMs which haven't reported amazingly strong numbers, but have the potential to do so. And that's where you kind of buy. Case in point, Mahindra & Mahindra. Look where the stock is from its recent highs. There's nothing that's changed so drastically that you need to punish the stock 20-25%. But we've done that. And that's primarily the opportunity for contra investors to value investors to get in. Maruti is, of course, done very good numbers. Everything's fine, but they've not had any significant launch. The Fronx has surprised everybody, but that's kind of a lag effect. Till they do something with their hybrid portfolio, deepen that, or, of course, the EV portfolio is still about a year away. So that's why the dependence on hybrid is going to be more, and they're dependent on Toyota for that. So there's a little bit of a time that you'll have to give to them. Market, like the commentary post the numbers didn't look very great. But I think the comments on management are some way encouraging. At least keep the faith because of that. So it's like a market performer kind of expectation that's built up. But the outperformance would come from M&M if you really ask me specifically in the OEM pack.
All right. Prakash, hi, good afternoon. Prakash, have you driven the Fronx or the Jimny?
Yeah, I own the Jimny. I haven't seen the last year when it was launched. So it's an amazing vehicle, but it's a lifestyle vehicle. It's not something which is going to give them numbers.
Yeah. I found the vehicle as well quite impressive. I drove it a few days ago. Thought it was pretty cool. Obviously, it's not part of my buy list because I'm at that stage of life. But Prakash, what about a couple of other numbers, that disappointed in the first half of the year? The management is promising far better outlook for the second half. Case in point being a Concor. That story has gone horribly wrong, actually. The management is talking about 18% to 20% growth, volume growth for the year. At the half-year mark, they're struggling at mid-single digits. But still, they're confident that things have picked up and they'll do that 18% with margins of 25-26%. And the street is taking note of that. Stock is up close to 4.5%. What's your view on it?
Yeah, so, I told you the market wants to latch on to good news. It's in a festive mood, even if numbers aren't as festive. What's working in this favor, in favor of Concor here is it's still under-owned. Though there's been a lot of hype, but people who have bought into it about a year and a half, 2 years back in the anticipation of the divestment event, they were also moved out. And we've seen it kind of consolidate in between this 750 to 950 kind of a band. But thankfully, the business has grown and become much more efficient in the last 1.5 to 2 years. And that has taken some time. The ROCs have got impacted because all the earnings growth always comes with a lag when they've expanded wherever they had to. And in the anticipation of divestment, there's not much they can do in terms of putting money behind the newer project. So it's a very difficult situation for the management also to kind of report stellar numbers and growth and keep chasing all that growth. So if you are okay with the asset replacement cost, I think it's a good buy. But you also have, Gateway District Parks and Aegis. And logistics is getting to be quite interesting. And I can tell you, last 2 months, I worked on this sector a bit actively. And what I'm finding is, even the 2PL or 3PL packaging or whatever they call part of warehousing and logistics is growing so fast that probably the containerization is not yet such a big delta potential. You'll probably have more on the last mile connectivity, things improving there. But Concor, of course, as I said earlier, I look at it purely from an asset value replacement cost perspective. And that's where it still probably gives you some sort of a benefit. It's like a BEL at 120, 130 bucks. At some point, it will deliver and it will grow. So it's like that.
or a Federal at 120, 130, right? You got lots of those examples. Coming back to you for more, Prakash, in a bit. But, we got another very large IPO which is around the corner. And, it's from a category which is coming to the market where you don't have very many other sort of listed peers. I'm talking about food delivery aggregator and quick commerce service provider, Swiggy India, where the IPO is going to open shortly. Mangalam is here with all the details. Mangalam, of course, along with our colleague Shilpa, sat down with the management team at Swiggy as well and had the chance to sort of get all the details from them. Mangalam, tell us, what did you pick up? And also for viewers watching, how does it now compare to the listed Zomato?
Well, it's one of the most anticipated IPOs of this year from a consumer standpoint as well, because of the buzz that Swiggy and Zomato have created in our daily lives and increasingly creating with all the quick commerce apps that they have as well. So for those looking at the details, November 6th is when the IPO opens, closes on November 8th for retail shareholders. Price band of 371 to 391 rupees. A size at the higher end of the price band would be close to 11,300 crores, of which 4,500 crores is the fresh issue, and the offer for sale from existing investors is close to 6,800 odd crore as well. So at the higher end, the post-issue market cap that Swiggy is seeking is close to 87,300, a little over $10 billion, whereas Zomato currently is trading at around 2.2 lakh crore in terms of market cap, and that's the divergence where there is a fair amount of interest. If you look at the overall B2C gross order value for Swiggy, that's increased from 20,000 crores in FY22 to closer to 35,000 crores in FY24, and in the first quarter itself, for which they've reported numbers, it's close to around 10,000 crore. So you analyze that to close to around 40,000 for this year itself. The average monthly order frequency in the number of times people order on the app has also increased to around 4.5 times. And if you look at other things as well, the food business, that has shown a bit of a turnaround. The gross order value has increased to 25,000 crores as of FY24, and the contribution margins in the food business has also improved all the way up to 6.4%. Remember, the comparable number for Zomato was close to 7.6% in the quarter that went by. If you look at the e-commerce, the Q-commerce business as well, the gross order value is close to around 2,700 crores for the previous quarter, implying an annual run rate of close to around 12,000 odd crores for this year itself. But out here, while there has been improvement on the contribution margins, they're still negative as compared to Zomato, which is positive. So a bunch of questions that we posed to the management, and two important takeaways that we got. They're currently at around 550 dark stores as against Zomato, which is close to around 800. They will look to open around 1,500 dark stores over the next 4 to 6 quarters. And secondly, food delivery EBITDA margins, not the contribution margins, EBITDA margins are close to 0.8%. On a steady state, the industry sees potential of 5%. So you add more dark stores, that becomes your revenue driver, and there is case for food delivery margins over the next few years to actually quintuple from closer to 1% to 5% itself. The question is, what are you paying for all of this? More importantly, Zomato market cap at close to 2.2 lakh crores, Swiggy at the upper end is 87,000 crores. Assuming that the industry grows at the same rate for both of them, then price to sales multiple 2 years forward, Zomato is actually 10.6 times, whereas Swiggy is 4.2 times. Most on the street were expecting, a 25 to 30% sort of discount, but this seems like a 60% discount, and maybe that would have a lot of people interested.
Mangalam, do we know what is the GMP, etc. for Swiggy? I mean, will the implied market cap at what they're offering stock is X, but it won't list at X, right? I mean, right. Do we know what that number is? And that could change depending on the market.
We wouldn't quite know the GMP as of right now, because the IPO opens on November 6th, so that is when we'll have a better idea. But if the unlisted market and the off-market transactions that have something to go by, what's interesting is that the last few tranches happened at around 360, 370. So the IPO is not a bigger premium to the price at which it was happening, and that is something that has the street excited, because most on the street were working with a number of anywhere between 450 to 500. But at the same time, the fact that the company has come at around 87,000 or just a little over the last round at which it raised money as well has a lot of investors interested, and which is what I posed to the management as well. I said that, from what was earlier being spoken of versus what has been offered right now, there's a big divergence in the valuation as well. They said that they spoke to a bunch of people, all investors, and it was a value that was derived from what they were willing to pay versus what the company was seeking, and they wanted to leave some value on the table for the investor. So that's the rough sum and substance of the conversation that I had with them. Grey market premium, we'll probably come to know closer to the IPO, but the short point is that it is not at a much bigger premium to what was happening in the off-market transactions.
Okay.
Right. I think 6th is when the IPO opens, November 6th that is, so not very far, we'll know. Mangalam, thank you very much for that, appreciate it. Prakash, you heard that detailed sort of piece on Swiggy and then Swiggy versus Zomato. How would you look at this entire thing? I mean, for those who are owning Zomato, should they apply for Swiggy? If you don't own Zomato, should you definitely apply for Swiggy IPO? What's the sense?
Yeah, so, I know it's not exactly comparable, but it harks back to the poser that came when Hyundai came up with its IPO. I mean, if you have Maruti shares, would you sell and go ahead and buy Hyundai, or would you buy Hyundai as well? Now, my sense is from all the metrics that we've seen, Swiggy doesn't really have such a strong moat. It's just that the market is big enough for them to be able to grow as they've planned, and they will be able to grow, I'm sure. Zomato has a very different moat attached to it. When you buy the Zomato share, you are not just paying for the food delivery business, but a very well-established, accepted, fast-growing quick commerce business. So, of course, Swiggy's Instamart is a small baby as compared to what Zomato carries in terms of Blinkit. So, I don't think it's very fair to compare. Swiggy is a pure play business, and that's why the valuations have been softened a bit in the last couple of months from where we started off. The billions of valuation that we saw, and today what they're coming up with is definitely much lower. So I would not be too excited to buy into Swiggy in the IPO. And as you know, I don't really. I'm not a big fan of IPOs. I would wait for listing to happen, market to kind of recognize the kind of price equilibrium which is valid, and then take a call on that. But at some point, yes, it could get attractive, but not necessarily participating in that.
Okay, Prashant, on the grey market premium, maybe right now people are busy ordering their Diwali sweets on the app. Once Diwali is over, they'll think about buying the stock as well. But right now it's about everything that you need to stock up on, right, ahead of the festivities. That's Swiggy and Zomato. Let's move on to another really important story. This one comes in from the telecom sector. And could there be some relief coming in for telecom companies, and relief in the form of waiver of certain bank guarantees? This is what seems to be the thinking within the government. We have Ashmit joining in with more details on this exclusive. Ashmit, what are you picking up?
Well, there could be a big relief in the works as far as the telecom players are concerned. Bear in mind that there has been a long-standing demand from the telecom companies to waive off the requirements to issue bank guarantees. Historically, we've seen that every time that there is deferred payment of spectrum dues, it is securitized by way of bank guarantees. That has been a pain point for the industry. They've reflected that. They've put that across to the government. In 2021, the government did grant relief, but that was done prospectively. So no bank guarantees required for 2022, 2024 auctions. The question that arose within the telecom industries, if the government in principle is kosher with that idea, then why not waive bank guarantees for even the deferred spectrum dues for spectrum that was acquired pre-2022. Now we understand there appears to have been reconciliation between the two sides, the DOT on one hand, the telecom companies on the other. A cabinet note, importantly, has been floated to that end for waiver of bank guarantees that need to be supplied by the telecom companies for pre-2022 spectrum. Now, why cabinet note? This will require cabinet approval, as this will require amendments to the notice inviting applications, to the lease agreement, which cannot be done without the cabinet's approval. But in principle, that DOT appears to be reconciling with the position that if we've done that prospectively for 2022-2024 auctions, it can also be done in principle for spectrum that was acquired pre-2022. So clearly a long-standing demand of the industry could come to the aid of cash-strapped players such as Vodafone Idea. Back to you.
Okay, all right, got that. Ashmit, thanks very much for the details over there. Well, let's just take some final thoughts from Prakash before we let him go. Prakash, any view on some of the key earnings? Voltas, for instance, was a little disappointing. Keynes has turned in another good performance. Anything that stood out for you where you are inclined towards buying the stock?
So, I know this again sounds a bit beaten out and boring, but I somehow like the REC set of earnings. It didn't kind of respond to very positively that day, at least, because there was probably higher anticipation. But I think REC as a play is going to be so critical for sustaining this entire growth that we've seen in of course, it's been a couple of days that the numbers came out. But I believe the lower it gets and the lower you buy into, it offers you a much better risk reward. The growth going forward in the next 2 years at least is so clearly visible for these financials in the power space that there's no reason for defaults to actually impair that kind of accelerated growth that they have. They are already capitalized well. They could do that further. I think that those numbers tell me a different narrative for the long term, which again, as I said, you'll have to look at it with 2 years plus kind of horizon. It's not a quarter-on-quarter kind of a game. But yeah, other numbers, most of them have been, better than expectation in the last 2-3 days at least. But then the markets also, come to a level where things start looking better if you're in a good mood. And I would really read too much into some other very specific names.
Okay, all right. Prakash, we'll leave it there. Thank you very much for joining us, and it's a pleasure having you with us here on CNBC TV18. Well, as we celebrate 25 years of excellence here at CNBC-TV18, we invite you to the most anticipated event of the year, the Global Leadership Summit, bringing together visionary policymakers like the Finance Minister Nirmala Sitharaman, RBI Governor Shaktikanta Das, industrial leaders like HSBC India's Hitendra Dave, Kotak Mahindra Bank's Uday Kotak, and trailblazing startup founders. This is where the roadmap for India's next 25 years of growth and global leadership will be charted. You don't want to miss this. Okay, welcome back. No great change from the last time that we checked, looked at the Nifty, or when we actually started at 2:30. It's been down 100, 110 odd points. That's exactly where we are right now as well. The good thing is today is a decisively positive day as far as market breadth goes. So you got 2,100 stocks higher and about 600 stocks which are lower. So it's some over 3:1 advance to decline ratio. And I was talking about small caps, micro caps. I mean, that part of the market is really doing well and buzzing. Some more numbers, of course, are also coming in. Carborundum is reporting numbers, margin expansion, stocks up about 3.5%. Let's welcome in Rupen Rajguru, who is now with us. He's head of equity, investments and strategy at Julius Baer. Rupen, good to have you with us here. Thanks for your time. I just wanted your thoughts first up on autos, Rupen. The backdrop, of course, is the very strong performance that we saw. over the last 2 years for the auto sector, both the OEMs and auto anchors as well. But lately we've seen some price corrections as well, sharp in some cases. From the two-wheelers, Hero, of course, has seen the big casualty. In four-wheelers, Maruti has come off quite sharply. What's your sense? Do you think even if there is some slowdown, and we'll get numbers for October soon, it's in the price?
Hi, good afternoon, Prashant, and season's greeting to you, everyone in the CNBC family, and to all your viewers. So, auto as a sector, if you look through, barring last 1 month or two, it has had a phenomenal bull run. From a stock market perspective, last 2 years, auto as a sector has done phenomenally well. And we have seen that coming through cycles. It initially started with the passenger vehicles, then the two-wheelers. And earlier, if you recollect, post-COVID, there were a lot of issues around chips, higher prices of raw material, demand, higher oil price. All of those got self-corrected. And then we saw 8 quarters of record margin expansion across the board. And the stocks got massively re-rated. As we speak now, what's happening is that in some of the segments, be it two-wheelers, the competitive intensity has gone up. There is competition from the EV side. In four-wheelers, clearly we are seeing some bit of slowdown in the discretionary spending. Already the entry vehicles are struggling while the higher-end SUVs are doing well. And we are seeing all the companies announcing discounts. So the point here is that what we believe from a stock market perspective, auto as a sector definitely now will take a pause. And we have been mentioning that in my earlier last month's conversation as well. It has to, now the earnings catch-up has to happen. A little bit of valuation readjustment has to happen. And we saw the biggest IPO as well, in the one of the auto company which came out both on the two-wheeler as well as on the four-wheeler side. So net to Prashant, to answer your question, auto as a sector, we believe will take a pause. There can be some tactical opportunity, but right now for next 3 to 4 quarters, probably it would be a market.
All right. Hi, Rupen. Good afternoon and good to see you. Rupen, what about consumption basket? So far, urban India has been doing well and everyone has been playing those themes. Now it appears, that there could be a lot of focus on rural India. And that's where the trends in consumption may change. How are you playing that theme?
Yeah, hi, afternoon, Nigel. I think you said it right. See, if any themes, any structural theme will have some bit of cyclicality involved. So in consumption, the common thread across all the commentary, especially if I were to first talk about staples, has been for this quarter is that rural is seeing green shoots, some better traction there, and urban is struggling. And I think one of the key reasons would be that because of higher inflation, some of the population, urban population, probably would have gone into down trading. So some of the local brands are giving now a big competition to the branded players. So that is what we are witnessing. So currently, as a theme, as a strategic level, we are positive on high-end consumption. But tactically, right now, some of the low-value consumer discretionary item we believe will do well. One of the key reasons for that being, the rural economy is seeing a comeback. Government spending has gone up significantly. If you look through this, on an average, the total this year state governments are spending almost 2 lakh worth of amount across various welfare schemes. You might call it freebies, but I would call it more of welfare schemes. I think some of the welfare schemes are targeting females. As per a recent survey, almost 17% of the entire female population are covered by this welfare scheme targeted for females or women. So here we will see some bit of money coming there, and that will take in some of the discretionary spending on the low ticket side. So that will see a comeback. So overall, Nigel, consumption in the near term, the low ticket consumer discretionary items will do better than some of the higher end consumer items. So that is our
Okay, so that's the call on consumption. Rupen, hi and happy Diwali to you. What about financials? How are you playing this part of it? Because the trends are extremely mixed now. So give us some more color on, lenders, non-lenders, within lenders, large banks, small banks, NBFCs. How are you playing financials?
Surbhi, hi, afternoon. Post-COVID, once for almost 3 years, and I think thanks to also RBI intervention, what we saw, there was a massive re-rating of the public sector financials, public sector enterprises, by especially the public sector banks. Why? Because the credit cost across had gone down significantly. So in an era wherein because of lower credit costs, profitability was pretty strong, the ROE improved. So there was a massive valuation re-rating happened. And there was no distinction between, say, well-managed, historically well-managed private sector bank vis-a-vis some of the other banks, as well as some of the other public sector enterprise, because the credit cost had gone down. In fact, starting this quarter, we are seeing, some bit of distinction, so to say, from a market perspective, because finally in this quarter we saw, slippages specifically on the MFI side, on the unsecured lending book has spiked significantly, and now I would say the bank which really has good underwriting skill will see that distinction. So while some of the amongst the top 4 private sector banks, barring the number 2, all have got massively derated. So our call is, these are the other 3 banks on the top 4 private sector banks will see some bit of re-rating, because they have a much better underwriting skills, and market will start distinguishing that. Amongst the others on the non-NBFCs, here again, the largest NBFC had got derated because the same reason which I explained earlier was also applicable to them. Now we are seeing, as probably the growth is pretty strong and the asset quality is also under control. So some of those quality players will see a comeback, and I think that is our call on financials.
I mean, absolutely, and I think, for names like Bajaj Finance, etc., out of the NBFC space at least, what they say, with the old saying, right? First in, early out from any sort of, credit cycle, early to recognize, but also kind of early to come out of that cycle. So we'll see. Of course, I mean, the stock's not done anything now for the last, I think, a few years, the Bajaj Finance stock, that is. Any other single stock ideas, Rupen? Anything you would want to share with us? I know you guys work on a lot of bottom-up ideas. So you want to share any names with us? With, of course, full disclaimer. Stuff which is looking interesting.
So Prashant, from compliance reasons, I won't be able to share individual names. But as you know, now we have to understand that hopefully, the market was in a one-way bull run, and a lot of narrative stocks had seen a phenomenal run up, right? So now I would say the distinction between the actual narratives as well as execution will come into play. So I would say there are, to answer your question, Prashant, there are bottom-up ideas across the sector, right? Like we mentioned, within bank, there are bottom-up ideas, or I would say, one theme probably, which we like would be, in an environment in which we are, some of the mean reversion plays across the sectors will do well. So be it, stocks from the pharma space, or be it, stocks from we spoke about autos, but some of the chemical names. So all of those which probably had a good run, have been consolidating for last 2-3 years. Probably now we'll see a traction coming back, once the top line comes through. So there are bottom-up ideas across the sector, I would say.
Okay, we'll leave it there, Rupen. Thank you very much. Festive greetings to you and your team. Appreciate your time here on CNBC-TV18. Well, 125 points lower. We're at about 24,340. We're going to take a quick commercial break here. As always, we get you what's happening in dealing rooms. D Street Chatter with Nimish coming up. And after that, we'll get you some short-term trading ideas. Stay with us.
Well, the markets are at the low point of the day now. The Nifty bank actually has moved lower. We're down 550 points out there. And the Nifty as well, no signs of a pullback right now. Let's see who all are pulling down. Metals has gone down a little bit. JSW Steel as well as Hindalco. Adani Ports that was holding with the gain, I think, of close to around 2.5%. That's given off a little bit as well. And Grasim has moved into the red. So I guess all of them are putting some pressure. Add to the list, Infosys now down 2%. I think Infosys could be one of the culprits out there. But a good time to find out what's going on in D Street Chatter. Nimesh is with us to tell us exactly that. Nimesh, take it away.
Hi, Nigel. As rightly pointed out, Nifty is under pressure. So is the Nifty bank, but it's a broader market which is relatively outperforming. So it looks like some bit of traction is back in the broader market stocks, especially in the mid-cap and small-cap, which have beaten down very sharply in the last many days and weeks. From a flow perspective, yes, there is selling pressure, but that's clearly the intensity is clearly reduced in the last couple of days, and so is the case today as well. So there is buying as well from some larger FIs in today's market. That's the overall feedback. From a sector perspective, autos have done well, and that's one space which is well bid today. Looks like the all eyes will be on the festive season demand, and if the demand picks up, you're going to see a bit of a upside reaction as well, because most of the stocks have given up in the recent days. So that's a space to watch from a trend point of view. I guess the other interesting point was some bit of volumes picking up in the PSU stocks. Remember, all the stocks are down 30-40%, and now you're seeing a bit of traction back. The volumes are on the higher side for the last couple of days, so it looks like some bit of traction is back in the cash PSU names as well. So that's one space which has stood out from a volume perspective. But clearly, the selling intensity has reduced from the larger FIs in the last couple of days, and so is the case today as well.
We really hope that it stays that way. It's not just that they're also taking a bit of a Diwali break, but one would really hope, the bulls would hope that it's coming to its end, that whole wave of FPI selling. Nimesh, what about stocks? What's interesting on your radar today?
Well, the first name is Laurus Labs. It keeps surprising on the upside. I mean, despite weak numbers quarter after quarter, the stock doesn't fall much. Today is marginally under pressure. There's a large block, 0.6% equity got changed hands. I understand one of the leading FI was a seller. So disclosure, if there is any, could be interesting in Laurus Labs today. So that's the first name. Second, couple of private bank names which continues to be under pressure. It's not reacting in the stocks, but there is selling is what I understand, both in AU Small Finance Bank and IndusInd Bank. Remember, IndusInd Bank last week was down 18% in a single day. And even after that, there is selling pressure. That shows that there is still supply coming in those banks like AU Small as well as in IndusInd Bank. The third is LT Foods. After a long time, it looks like some interest is back. I understand there is delivery-based buying happening in LT Foods today at leading FI. So that stands out for me. And the last is Varun Beverages. The company post the earnings did disclose about the QIP plans. It looks like it's pretty much on. Could happen early next week because the roadshows, I believe, has started. So watch out for a QIP in Varun Beverages. Some very large marquee investors are likely to invest, is what I understand, as far as the roadshow feedback is concerned on Varun Beverages.
It's interesting, Varun Beverages. Nimesh, Laurus Labs, it ran up 10%, I think 12% last few days. But nothing more, right? I mean, just as you said,
nothing more.
Mr. Chava promises. But
I know, exactly. So the promoter keeps, the management keeps talking about growth to come back in the next quarter. I think it's been like 4 quarters now that the numbers have been disappointing. The street seems to be quite negative as well. If you look at the reports, virtually everybody has a sell call or underperform call. But the stock surprisingly, surprises every quarter. After poor numbers, it goes up. So nothing much to talk about. Maybe if there is a disclosure today, because it's more than 0.5% equity, could be interesting to track who's been the seller in Laurus Labs today.
And who's bought also. MCX, Nimesh, and picking up anything? It was down 8% actually. Now down 6.5%.
Well, Prashant, there is a chatter in the markets for the last couple of days that maybe a large holder is looking to sell and fully exit. So that is maybe the reason why the street is a bit nervous. But I checked with a couple of large holders of MCX, especially the institutional holders, and nobody seems to have been sounded off of a potential block. So there is a rumor of a large block and a large holder fully exiting, but not that the book has been shown to anybody. At least that's the feedback that I'm picking up from the buy side.
All right, Nimesh, thank you very much for that. So that's basically chatter from D Street with Nimesh. As always, we'll keep an eye on some of these names. Mitesh is now joining us with short-term trading ideas, BTST. Mitesh, what do you have?
Yeah. Prashant, Reliance is something, you know, which is of interest, and if the Nifty has to reverse, maybe that is the stock which has to pick up. So it's done some good base building around these levels of 1330. So keep a stop at about 1328, and maybe a one to take out a positional call for targets of 1375.80 can be taken on the upside. And on the STBT side, I have STBT on Godrej Properties, which I would recommend taking a short with a stop just about 28.91 and a target from 28.35 on the downside can be looked at.
Got it. Okay, all right. Thanks a lot for that, Mitesh. Well, let's focus on 5-star. Actually, the numbers look quite good in yesterday's trade. However, the management has gone ahead and cut their guidance a little bit for the remainder of this year. Abhishek joins us to help us out with the reasons behind the stock being under pressure. Abhishek, take it away.
Well, Nigel, to begin with, the Q2 FY25 performance is also a 5-star performance coming in from 5-star finance. So take a look at AUM growth of 32% YOY and about 5.5% sequentially. The NII growth is robust at 30% YOY and about 6% sequentially. PAT is also up 34.5% YOY and about 6.5% sequentially. The net interest margin has improved sequentially and the asset quality has largely remained stable. However, management in the con call did mention that FY25 credit growth guidance has been cut to 25% from 30% that they had earlier, and they have cut the lending rates by 200 basis points, which has been taken negatively by the street. Analysts say that this might be a regulatory nudge that RBI has been guiding in. So IFL Securities has written on 5-star. They have a buy recommendation, target price of 890 per share. They say that good Q2 FY25 has been overshadowed by the guidance cut that the management has given. So 5-star lending rates are about 24.3% and they make a spread of more than 14%. So RBI had taken action for growth and profitability moderation for many of the NBFCs earlier, and this might have spooked 5-star also to cut its lending rate. So they have cut FY26 and 27 earning estimate anywhere between 8 to 10%, and that's weighing on the stock price today.
Okay, all right, got it. Abhishek, thank you very much for that. Getting in numbers from Dabur now. Let's just see what they've done and how that volume growth is going to play out. The company anyway had alerted the market earlier when it guided by saying that specifically in the beverages portfolio there is a bit of an inventory sort of issue that's playing out, and the fact that that inventory issue relates with the quick uptick in quick commerce, and that as a channel is really playing up. So the profit number is slightly below the estimates. Let's see how the margin profile has been, 3029. So revenue is fine. Revenue is more or less in line. We'll wait for the other details on the operational front. We have Mayuresh Joshi of William O'Neill joining us on this leg of the show. Thanks for joining in, Mayuresh, and season's greetings to you. Happy Diwali. Let's start right there. Dabur stirred off a debate. They were the first ones to flag off some issues on dipping volumes and sluggish sales. At that time, we were wondering if it's a company-specific issue, and now we know it's not. Your take on FMCG and Dabur itself?
Afternoon, Surbi. Season's greetings to you, the entire team at CNBC-TV18, and all the viewers as well. Have a happy, prosperous, healthy, and wealthy Diwali. When it comes to FMCG as a space, yes, I think the general market commentary, whether it's Nestle, whether it's Tata Consumer, HU Health, or even Dabur to a certain extent, have been pointing out to urban consumption actually slowing down. Now, whether it was a combination of floods in major urban cities and a combination of elections put together, or whether we're going to see some element of respite coming back, I think Q3, Q4 numbers will be a testimony to that. But one leg, which is the strongest leg for FMCG companies, rural consumption, is expected to come back very, very strongly with better monsoons, expectation of a better Rabi harvest, discretionary spending patterns in rural and semi-urban areas should bounce back very, very smartly. Having said that, I think the expectations in terms of Dabur's numbers in line with expectations, it all boils down in terms of the product mix going forward, and specifically what the management commentary is related to urban and rural mix. In lieu of the performance of FMCG companies, I think Marico has a stellar show compared to the rest of the pack. Underlying volume growth of 5%, EBITDA margins at 19.5%. A large part of their portfolio, including Parachute, has done exceedingly well, both in value and volume terms. You're probably seeing green shoots happen in value oil, head oil as well, where there is a bottoming out which the management feels. And expectations in terms of their international business showing resilience, specifically the Bangladesh operations in view of the political turmoil that you're seeing out there. So our take is that a couple of stocks probably might stand out. Marico, Jyoti Labs is something that we are keeping on alert.
Marico and Jyoti Labs. Okay, Dabur is very interesting because I guess the company did a good job of managing market expectations and giving some forward guidance by saying before the numbers that, look, volumes are going to drop. And they have dropped, but they've dropped less than what was anticipated. The poll that Mangalam was running sort of pointed out almost 10% drop in volumes. The drop is only 7.5%. And then, hey, the stock has sold off very significantly, right, in the last couple of weeks. Stock's down almost, I think, 13-14% in October. Let's pull up a longer chart on Dabur. So it's nowhere close to its highs. Hasn't done much this year at all. And therefore, we're not getting any sort of a shocking reaction. If anything else, I think the market's taking this with both hands, saying it's not as bad as perhaps that was feared earlier. So that's Dabur. So that's the FMCG picture. We'll try and get it Mangalam in a bit as well for more details on this. That's FMCG. On discretionary consumption, what's your top pick, Mayuresh?
So again, being very, very selective out here, Surabhi. I think we are keeping these QSR players on our radar, but I think most of them have probably done a tad bit lesser than what the market probably expect. So you've seen numbers of Restaurant Brands Asia as an example, which have probably not been up to the mark. And therefore, I think how do Q3 patterns play out is going to be extremely interesting in this sphere. So I think we are having a watchful eye out here. Obviously, I think how consumption patterns evolve is going to be very, very interesting as we head into Q3 and Q4. But I think you're just mentioning about five-star finance. I think one way of playing consumption on the rural side might also be these rural-focused NBFCs, where our take is that as consumption patterns evolve for rural India, I think a large part of these rural NBFCs would come back in focus. So an indirect proxy for the entire consumption story might be these rural-focused NBFCs, Chola as an example, or even a few of these housing finance companies, PNB Housing, which are probably foraying into the affordable and emerging segment, focusing more on tier 2, tier 3 cities, can be an interesting play. Numbers have been very, very good and robust, and the management expects these numbers to continue. So I think we're looking at proxies as far as the discretionary consumption is concerned, something like a Chola or a PNB Housing.
Got it, Mayuresh. We'll just slip into a short break. Just before we do that, the Nifty Bank has come off close to around 150 points from the lows of the day. Could have an element of weekly expiry playing out, and also the big boy HDFC Bank, that's cutting its losses. It's still down close to around 0.7%, but it's cut its losses. And you have Axis Bank, that's the other one as well, that's cutting its losses. Both of them still in the red, but they've at least seen some bit of a recovery. And IndusInd Bank, after the badgering that it's got, that stock is pulling back a little bit. I'll tell you what, we'll take that mandatory break, come back, and we'll wind down the markets for you today. Stay with us.
I accept your nomination.
We're going to win Arizona. We're going to defeat Kamala Harris.
It's the election verdict the world is watching. Will Donald Trump reclaim the White House and become the oldest president to be sworn in?
How will this US election impact global trade and inflation?
Will Kamala Harris make history, becoming the first woman president of the United States of America?
How will the next US president deal with geopolitical volatility? What next for the India-US relationship, the most defining partnership of the 21st century? What's CNBC-TV18 for the best newsmakers and the sharpest analysis?
We bring you all the action live right here on CNBC-TV18.
Okay, just before we sign out for the day, let's quickly go to Mangalam and deep dive a little more in those Dabur numbers. So, Mangalam, I think they primed the market really well, but what do you make of the internals?
Well, the internals are definitely soft, but a couple of positive points coming in from Dabur's numbers as well. You know, there were two reasons why the revenues were lower this time around. One was because beverage was impacted by unseasonal rains and flooding. Second part is they were correcting that inventory. But having said that, the secondary sales in the quarter increased by 2%, so that is a mild positive. Badshah grew by about 15%, and the volume decline wasn't as much as the street feared. It was 7.5% as against expectations of 8 to 10%. But just on the reported numbers, you know, be it the revenue, be it the EBITDA or the net profit, all of them have missed street expectations, and on a year-on-year basis as well, there has been a bit of a decline. The company hasn't curtailed on any of the ad spends, so that's a positive. And the stock had already seen a correction of about 12.5 to 13% over the last 1 month or so, basis the Q2 update that had come by, and as a result of which, we are seeing a bit of a relief in the stock price from those lows itself. The reported numbers are softer than street expectations, with a few streaks of positive news coming in terms of secondary sales, and more importantly, them not having announced any sort of rollback in ad spends as well. And as we speak, the company has also announced an acquisition. They'll go ahead and acquire the hair oil business of Sesa. We'll just get a little more details on that one. As we get that, that should also be good for the company, given its recent run of having acquired a few companies like Badshah, etc., and growing them. Badshah itself grew by about 15%. So reported numbers soft, few internals which are positive. Second half and management commentary would be crucial to track. The stock had already corrected, so seeing a bit of a relief.
All right, Mangalam, thanks a lot for that. Moral of the story, keep everyone prepared. If something's going wrong, tell them in advance. The stock is up close to around 2% or thereabouts. Well, today was the day when the broader markets did well. So let's start off with a few stocks from there. Jain Irrigation was up close to around 15%. You had Ace that was up close to around 12% in today's trading session. Big move is what we saw. Spandana Spurti, that was the accident of the day a couple of days ago. Well, that stock bounced up in trade. Poly Medicare as well, that's another stock that was up and about in today's trading session. Management sounded confident yesterday. They said that China plus one theme is definitely something that's taking place. So that stock as well did well. Easy Trip, that's got bashed out of shape. Well, that one as well did bounce up. Genesis is another name that moved up on very, very large volumes in trade. So plenty of winners actually from the broader markets. Lakshmi Organics as well, add to the list. Borosil, so many winners from the broader market. So though the headline index goes home with a cut of close to around 120 points, you have the mid-cap index that ended higher, and the breadth of the market firmly in favor of the number of stocks advancing. By the way, you have Dabur that will be acquiring Sesa Care.
Yeah.
So that's, I think, another piece of news out there. We'll have to pull out the financials out there. But Prashant, yeah.
No, Mangalam mentioned that, so yeah, we'll have to see what's the size of the business.
Yeah, size of the business.
A bit from now, we'll do that. But just to add to the list of stocks which Nigel mentioned in the broader market, GHCL, if you can add these names up, was a big mover. Actually, it started strong and ends the day even stronger. So that's GHCL on your screen, 609. Ease My Trip was a mover today. Of course, it's come off quite a bit from the highs. Radico